Insurance stock. What is fire insurance policy? The insurance policy that covers the loss of property due to fire, flood, and other perils. Who should buy the fire insurance policy? Owner of the property, lessee of the property, financial institution having advances loan against property, trustees of property, bailey of the property, mortgagee of the property. What property fire insurance policy covers? Building, plant and machinery, furniture, fixtures and fittings, other contents, electrical installation, stocks of raw material and finished goods, stocks in open. The different type of property that could be covered under a fire insurance policy are dwellings, means a house, flat or place of residence, offices, shops, hospitals, place of worship, factories, warehouse, etc. Type of asset to be covered under fire policies are fixed and non-fixed. Period of insurance is 1 year. Under home insurance, some insurance companies cover long period up to 10 to 15 years in a single policy. This policy enables the policyholder to claim compensation for cost incurred towards repairing, replacement or reconstruction of property damaged in a fire. Indemnification of the policy is by cash payment, repair, replacement or reinstatement. Reinstatement, that is the process of restoring a damaged property to its original condition or rebuilding it to its original state after a fire. This value is usually determined by the insurance company's surveyor or adjuster. What fire covers in basic policy, that is SFSP policy? It covers loss and damage due to fire, flood, lightning, malicious damage, explosion, impact damage, natural disaster, bursting of water tanks, subsidence and landslide. Add-on covers earthquake, terrorism, impact damage due to insured's own railroad vehicle, architecture, surveyor and consulting engineer fees in excess of 3% of claim amount. Forest fire, expenses towards removal of debris in excess of 1% of claim amount. Loss of rent, additional expenses of rent for an alternative accommodation, omission to insurer's additions, alteration or extension, 5% of sum insured of BMA, spontaneous combustion, temporary removal of stocks, deterioration of stocks in cold storage premises due to accidental power failure, deterioration of stocks in cold storage premises due to change in temperature, coverage for damage due to molten material spillage, startup shutdown expenses refers to the cost of associated with the restarting or shutting down a business or production process after a disruption by fire or other calamities. Escalation clause up to 25% of SI. This allows for an increase a policy limit of coverage amount to keep pace with the inflation, change of cost or other factors. Exclusions. First to be 10,000 of loss. War and nuclear perils. War perils are invasion of act of foreign enemies or civil war. Nuclear perils are nuclear reaction, radiation, radioactive containment, explosion or accident, loss due to pollution or contamination not caused by an insured peril. That means loss which is not caused by any direct result of perils covered like fire or flood. Loss may be due to other reasons is not covered. Loss, destruction or damage to the stocks in cold storage premises caused by change of temperature, that is loss due to accidental temperature fluctuation, equipment failure, power outrage, human error is not covered. Loss by burglary or theft is not covered. Removal of property to other sites is not covered. Means that if you move your property to a different location, either temporary or permanently, it may not be covered unless specifically endorsed. Examples are business interruption or loss of profits, loss of use or rental income, increased cost of expenses, economic losses or damage to reputation, losses due to delay in inconvenience, loss or damage by spoilage resulting from the retardation or interruption or cessation or any process or operation caused by operation of any of the perils covered. Examples: if a fire caused a production line to shut down and as a result goods in process are spoiled or damaged, the policy would not cover the loss. Special policies are floater policies, declaration policies, floater declaration policy. Floater policy. This policy is issued only for the stock stored in warehouse, godowns at various places and belongs to the policy holder. This policy issued for stocks in godown where inter-godown movement of stocks is very frequent and where it is not possible to record each and every inward and outward movement of stocks cannot be monetarized. Policyholder can take a policy in a single sum insured, which is floated over all the godowns. Declaration policy. This type of policy is useful for where there is frequent fluctuation in a stock values and to avoid the underinsurance, that is insurance of lower value of the stock based on pre-agreed terms of the stock value declared periodically, say monthly, and the premium at the year end, that is policy year, is worked out and the average of the stock value declared and excess premium, if any, will be refunded to the policy holder. Floater declaration policy. It is combination of the above mentioned policies, that is stock lying at various locations and the value of stocks fluctuating. Thank you.